Bull Bear Buzz podcast for decoding markets, fueling minds.
So you've probably heard of Urban Company, right? Maybe even used them. They're pretty much everywhere these days.
Definitely a familiar name.
And what's really interesting now is we're getting this glimpse sort of behind the curtain with their recent IPO filing.
Yeah, the draft papers are out.
Exactly. And it's not just about the listing itself, but what these documents reveal about, their business, their growth, and the whole Indian market they operate in.
Right. It gives us a real window into their operations.
So that's our mission today, to unpack the key stuff from those filings for you.
Sounds good. We've got the IPO details, revenue figures, profitability, how the different service categories are doing, beauty, home stuff, international, plus some market analysis too.
Okay, let's jump in. First thing, the IPO size itself. It feels smaller than the initial buzz, wasn't it?
It is, yeah. People were talking maybe RE's 3,000 crore, but the draft is looking at RE's 1,900 crore. And a big chunk of that is actually an offer for sale.
Offer for sale. So that's existing investors cashing out. That money doesn't go to Urban Company.
Precisely. The majority, in fact. So the actual fresh capital the company is raising is much lower, around Rs 429 crore.
Huh. So it's less about grabbing a huge war chest for, explosive expansion right now.
Seems that way. And if you look at where that Rs 429 crore is going, well, it's mostly for tech upgrades, cloud infrastructure, lease payments, marketing.
Sort of keeping the lights on and improving the current setup.
Pretty much. It points towards steady operations, maybe consolidating their position, rather than a massive, aggressive growth push funded by this IPO.
Yeah.
Feels more measured,
Okay, that makes sense in the current climate, but their revenue growth looks solid, doesn't it? Like 40% up year on year.
Yeah, Rs 846 crore in the 9 months to December 2024. That's strong growth. And they did report their first profit before tax, which is a milestone.
A profit. How much was that?
It was Rs 27 crore, but that's if you exclude a pretty big one-time tax credit. Still, heading in the right direction towards profitability.
Okay, positive signs. But where's that revenue coming from mostly?
Ah, that's key. 3/4 of it comes from customer services right here in India.
3/4. Wow. So what on the international side? They're in Singapore, UAE. Been there for, 5 years now?
Around that, yeah.
Yeah.
But the growth there has been slower, and those operations are still loss-making, according to the filings.
So India is really where the main action is, the real battleground.
Looks like it. That's where the bulk of the revenue and likely the focus needs to be.
Okay. Let's talk valuation then. This is always the big one. Last private round was around $2 billion, and the IPO might be similar.
That seems to be the expectation, yeah.
But their top line, the actual revenue, is closer to, $130 million?
Roughly, yes.
Yeah.
Which puts the valuation at around 15 times forward revenue.
15 times. That feels pretty high these days, doesn't it? Especially after the whole startup funding sort of correction.
It definitely raises eyebrows. I mean, a year or two ago, maybe, but now. Investors are looking much harder at profitability at sustainable growth. That 15x multiple demands a lot of future growth baked in.
You have to give them credit, though. Building a brand like that in India's home services market, it's super unorganized.
Oh, absolutely. Huge achievement.
Yeah.
Dealing with informal labor, varying digital access, price sensitivity. It's tough.
Yeah, they really nailed a need there. Especially in beauty and wellness, right? That seems to be their stronghold.
Definitely. That's been the engine, the real cash cow for them.
Yeah.
Started by connecting people with beauticians at home.
And they do more than just connect, don't they? They manage the whole thing.
Yeah, that's the interesting part. They onboard the professionals, train them, handle bookings, even use their own branded products sometimes.
Ah, so they control the quality, and that probably pushes up the price people are willing to pay.
And the average order value, yes. Think about it. A facial or a mani-pedi, those can run into thousands of rupees. Compare that to, fixing a leaky tap, which might start much lower.
Right, and people often book multiple beauty things together, don't they? Like a wax and a facial.
Exactly. You club services. Much easier to do that than booking someone to, say, fix a socket and also install a new lock in the same visit. It boosts efficiency and the ticket size.
Plus, beauty services have higher repeat rates, I imagine.
Much higher. People get facials or waxing done regularly. It's not like needing pest control, which might be once a year, maybe less. Their own data shows beauty customers spend more annually and book more often.
Okay, so beauty is strong. But is there a ceiling? I saw a stat suggesting that even with their RS 550 crore revenue from beauty, it's still only about 1% of the total Indian beauty services market.
That's a critical point. The overall market is enormous, estimated at 50, 60,000 crore rupees. Urban companies a big fish in the online pond, but the pond itself is just a fraction of the whole ocean, which is mostly offline, unorganized players.
So huge potential market still, but also massive competition, just everywhere.
Exactly. Both an opportunity and a challenge.
And talking about expansion, their plan to go from, 48 cities to 200 in 4 years? That sounds, incredibly fast.
It does sound very ambitious. Impractical, maybe, based on their history and just the market dynamics in India.
Why impractical?
Because once you go beyond the top, say, 25 or 30 cities, incomes drop significantly. Price sensitivity shoots way up.
So it gets much harder and more expensive to get customers willing to pay the urban company premium.
Precisely. Acquiring and keeping customers becomes tougher. We've seen food delivery guys like Zomato and Swiggy face similar hurdles in smaller towns. It's just a different economic reality.
And it's not like they have no competition even in beauty, right? There is another name mentioned. Yes, madam.
Yes, madam. Yeah. They're smaller, but growing fast, like 50% revenue jump recently, and they're actually profitable. Shows there are other online players making it work.
Plus all the local salons and freelancers everywhere.
Thousands upon thousands of them. Price competition is fierce.
Okay, let's switch to the other side, home services. Cleaning, repairs, that kind of stuff. The market size projections there look astronomical.
They do. The total addressable market, the TAM, for all home services in India is projected to be huge, like Rs 8 lakh crore by 2029. Glittering numbers.
But there's always a but.
There is. You need to look at the serviceable addressable market, the SAM, for urban companies specific.
Yes.
They define it as middle-income households and above earning over 5 lakhs a year in the top 200 cities. That's still big, maybe Rs 1,700, 1,800 billion in 2024. But it's only about a third of the total TAM.
And even within that group, how many actually use online platforms for these services?
Pretty small fraction, really. Maybe 5 to 5.5 million households in 2024. And urban companies serves around 4 million of those users, not necessarily households. So penetration is still low.
And getting customers for home services must be harder to make payoff compared to beauty. Lower frequency.
Exactly. You might spend, say, Rs 500 to acquire a beauty customer who then books 6-8 times a year. But a home cleaning customer might only book once every year, or even 18 months. Recovering that acquisition cost takes much longer.
And you're back to competing with the local handyman or cleaner who doesn't have the same overheads.
Right. Urban company offers standardization, vetting, convenience, but that comes at maybe a 30% premium over the informal guy down the street.
Who doesn't pay GST, platform fees, maybe not even benefits.
Correct. So when budgets get tight, that price difference really matters to people.
Plus, home services seem more complex operationally. Matching skills, needing parts.
Way more complex than beauty. You need a plumber with specific skills or an AC tech who knows that brand. Maybe they need a spare part. It's not a uniform playbook like a facial.
And this brings up that other issue, platform leakage.
Yes. The risk that after the first job booked via the platform, the customer and the service pro just connect directly next time.
To cut out the middleman and the commission.
Which is like 20-30% for urban company. It's a huge threat. They even acknowledge it in the DRHP, saying they need to maintain a strong value proposition to stop people going off platform.
Makes sense. It's a constant battle. Okay, one last area, the hardware push. Water purifiers. That seems like a totally different game.
It is. A big strategic pivot into manufacturing with their native brand.
Why are they doing that?
The goal seems to be creating recurring revenue. Sell the purifier, then sell filters, maintenance contracts, that sort of thing.
But they're going up against huge established companies that make stuff for a living, aren't they? Without much hardware experience themselves.
That's the challenge. It's a crowded, competitive market. And interestingly, big players like HUL and Tata Chemicals actually exited the water purifier business before.
Why did they exit?
Reports suggested it's just a very specialized market. Needs dedicated R&D, complex after-sales service network, things that maybe didn't fit well within their broader FMCG or chemical businesses. It requires focus.
And how is Native doing financially so far?
Early days, but the numbers aren't great. Only about Rs 28.8 crore in revenue in FY24, which is under 3.5% of their total, and it lost over Rs 24.6 crore.
Ouch. So it looks like a pretty capital-intensive experiment right now?
Very much so. Diversification makes sense on paper, but jumping into complex hardware manufacturing is a big, costly leap.
Okay, so pulling it all together. Urban Company, they've clearly built something real, solved a genuine problem, right? Credit where it's due.
Absolutely. They've created a significant consumer brand in a difficult space.
But the growth story seems to be hitting some, let's say, market realities now.
That sums it up well. The impressive early growth is now bumping up against challenges. The valuation question, the difficulty of scaling profitably beyond the big cities, stiff competition everywhere, and this unproven hardware bet.
The revenue base is still relatively small compared to that multi-billion-dollar valuation expectation.
Yes, and the core beauty segment, while strong, might be approaching a point where hypergrowth becomes harder to sustain just within that category.
So the main takeaway feels like this is going to be a long haul. For investors, for the company leadership, no quick wins from here.
It certainly looks that way. Sustained, profitable growth is the next chapter, and it's likely to be much more demanding than the initial scale-up phase. They need to be prepared for a marathon, not a sprint.
Right. It's about navigating these complexities carefully.
Exactly. Smart strategies for service expansion, deeper penetration in existing markets, managing costs, proving the value proposition consistently. That's the game now.
So to wrap up our deep dive, impressive journey so far, especially in beauty. But the IPO filing highlights these big hurdles, valuation, expansion limits, competition, the hardware gamble.
Which leaves us with a question for you, the listener. Considering all this, what do you think are the biggest roadblocks Urban Company faces now? Or maybe, how could they pivot or adapt their strategy to overcome these hurdles? Definitely something to chew on.
Absolutely. Thanks for walking through this with us today.
My pleasure.
Just a reminder before we go, the information provided is for educational purposes only and not financial advice. We are not SEBI-registered advisors.
Investing in stocks carries risks, including potential loss. Consult a SEBI-registered advisor before deciding.
We are not liable for any losses from decisions based on this information.
For more unbiased market updates, please subscribe to Bull Bear Buzz Podcast.